Good morning, everyone. It's day 2. I'm sure that everybody's low on sleep, a lot of alcohol, too many drinks last night, many panels, great networking. So thank you very much, everyone, that you took the effort and come this morning to this panel. Talking about the future of climatetech. Check that you're in the right panel now, yeah? Now, we've got the next 45 minutes to talk about this big topic. It could be very short, if you want. Is there a future or not? Depends on the view that we're going to take here. Either way, we're going to try to make these 45 minutes very useful for all of you. So we're going to have 3 rules for the panel. I hope you guys are prepared. You have, you have to say something new. You have to say something funny. And it has to be controversial. And the audience, please play some bingo and see who said how much. Tell us later the score. And you can always ask questions at the Slido. So we'll try to bake that into the panel. By the way, my name is Yair. I'm a partner at Extantia Capital. And I'm going to do just the easy part today, ask the hard questions. And my colleagues here, let's say, have some fun together. So without further ado, I'm very pleased to be here with you. Liza, Rajesh, Laurie, why don't you start with a short introduction?
Hi, everyone. So I'm Laurie, founding partner with @One Ventures. It's a deep tech / climate tech firm based in San Francisco. We've started operating in 2020 with 2 funds, over $560 million, and invested in a bunch of very exciting climate tech companies. So very excited to be here today.
Hi, I'm Rajesh Swaminathan, partner at Khosla Ventures. My background is in engineering, Bell Labs, business school, been investing in climate tech, deep tech for about 17 years now. The fund itself has been operating for about 20 years. Looking forward to the discussion.
Great. I'm Liza. I'm one of the co-founders of Carbon Equity. It's a climate fund-of-fund platform. So every year we raise and deploy a climate tech fund in early stage, later stage, US and Europe. We've raised 300 million so far and deployed in 25 funds, including Extantia and @One, full disclosure. And different from the typical fund of funds, we also raise from high net worth and family offices, but also from retail investors. So starting 20,000 euros, you can invest with us.
You're collecting the checks at the outside, right?
Huh?
You're collecting checks outside?
Exactly.
Yeah. Good. Even here, with all these flashlights, I see the elephant in the room. Laurie, RIP climate tech?
So is climate tech dead? No. But I think the sad news is that many climate tech companies are going to go under in this year and next year. If you look at the US under the Trump administration, I mean, all of the tax credits, subsidies, grants related to sustainability and energy, they are gone. So all of those climate tech companies that were entirely relying on subsidies are going to go out of business. For example, are you shocked to see companies like BP, Shell, Total, BlackRock, and many others scaling down on decarbonization and ESG? I'm not, because we live in a capitalistic world, right? So if oil is the thing that is going to make money tomorrow, businesses will go there. The number one responsibility of a business is to make profit, period. So I think we need to stop being naive with climate tech. Green premium will never scale. Better, faster, cheaper. Yes, cheaper. Yes, the climate tech companies that are going to make it are the ones developing solutions that are on par or better performance-wise, and that are at least at cost parity, if not cheaper. Right? We need to make it a no-brainer for industries and consumers to adopt those solutions. So is climate tech doomed? No, but only the companies that have the best performance and that are cheaper ultimately will make it.
Thanks. Rajesh, you've been around, right? I mean, you've seen clean tech 1.0, 2.0, 3.0, X.0. What's the advice? What should companies do, right?
Yeah, we've gone through a lot. Climate, as far as we are concerned, in the last 17 years in my limited career, we have seen climate tech die many times and come back and then die again. RIP climate tech is like saying RIP Earth. That's not an option. So it's not even an option. Like Laurie said, a lot of companies will go away, but that's true in every industry, right? Every industry goes through booms and busts. Look at AI today, a lot of companies will die. So if you take that as a concern, you will never go and disrupt and innovate in a big way. For us, the biggest learning is certainly along the cost element. Like we used to call, even 20 years ago, something called Chindia price. So when you're looking at building a company, the cost economics need to make sense, so much so that you should be able to sell the product as cost points in countries like China and India. And we don't take it as a, just a fancy language. We put it in spirit in every investment that we look at. I'll give you a couple of examples. So you said, like, don't stay at a high level, right? So we have a company called Fortera that's disrupting the cement industry in a big way. Look at cement, steel, any of these markets, these are all commodity. Nobody is going to give you a premium because there is a buzzword, because there is a Biden administration, because there is an IRA or something else, right? That's just not going to happen. That's not long-term sustainable. What these guys did is they're integrating in every cement factory. Like, think of that, whatever you're working on, think of it as, like, how do you figure out a way to integrate? This doesn't apply to every solution, but I'll take some extremes as well. But figure out a way to integrate into an existing plant. There is a very novel solution. They take the CO2 that comes out of a cement factory, put it back into the calcium oxide, and make a cementitious calcium carbonate. Now, what that means is you're not just using the CO2 back and you're not releasing CO2, but because you're adding CO2 back, you're increasing the throughput of every existing cement factory by 44%. So it's economics on day one, right? So that's the way we look at it in terms of how do we put that example for Commonwealth Fusion, our nuclear fusion company. How do you think about it? We put it on every company, and doesn't mean you don't innovate. You innovate in a huge way. Like, tech and IP are extremely critical, but figure out a way how to integrate that. The second thing we have learned is think of a backup market. By backup market, I'm not saying like plan B, cop out, and all that stuff. But 8 years ago, when we started looking at nuclear fusion, by the way, nuclear fusion was on the exclusion list of some of the best emerging climate funds at that time. They said we should not touch nuclear fusion, right? But when we looked at Commonwealth fusion systems, the way we looked at it was, look, this is going to require a significant amount of money. The biggest thing that needs to be de-risked at that time is the magnet. Like, can you get to 10 Tesla, 20 Tesla magnets? But we said, hey, what if you're putting these hundreds of millions of dollars and the magnet doesn't work out? Lo and behold, the magnet is extremely valuable for medical imaging market. So we said, okay, the worst case, we have to take this very bold bet of investing in Commonwealth fusion, nuclear fusion. That's the way to bring 24/7 baseload power. But worst case, if it doesn't work, there is a medical imaging market that's absolutely ripe for this. So that puts you outside the threshold, the comfort zone that you would typically have when you invest in this big high-risk investments. The third, I would say the biggest one for us is you have to go big or go broke in climate. I mean, that's the way to look at it. We said there are only 12 entrepreneurs who will change the world in climate tech. Nothing else matters. Like, you should not greenwash, you should not AI wash into any sector. That will be too short term. It will not work in the long run, right? So we said there are 12 entrepreneurs who will change it. Things like infusion, geothermal, cement, steel. Like, look at the highest impact. So if you're picking and going on working on a problem, you better work on the highest one that's going to make or break the world, and bring the right team, right syndicate to make it happen.
So basically, if I summarize that, climate tech is not dead, but the notion that we're building climate green companies for doing good, this is not the case. You need to build great businesses. If you have sales, you have impact, right? Maybe we move on to Liza, another hot topic, at least according to my LinkedIn wall, US versus Europe. You're an investor, you have funds on both sides of the ocean, you have hundreds of underlying portfolio companies. What do you think? That's an easy one, right?
Yeah. Well, surprisingly, we're still very eager to deploy in the US, and we're still seeing many of the most exciting managers in the US. And we spend a lot of time talking to the team, why is that, right? And I think it's because of a lot of what Rajesh just said, like, bet big. And I think Europeans still find it hard to bet big. So we have an incredible amount of patents, we have an incredible amount of early stage founders, but we're just not as good in bringing these deep tech companies to global scale.
Do you think Northvolt has now is a setback? Someone is betting big, betting the farm, and then it's on fire?
A lot of things went wrong at Northvolt. I don't think it's representative for the industry. I think you bet big, but you also need to bet big really, really smart. And that's maybe where Northvolt could have done a few things better.
Rajesh, is it a bloodbath these days in the US?
It's definitely tough, for lack of a better word. Like some of us have been working in climate for such a long time. If somebody comes and says that's a hoax, that's definitely a big concern. But that said, we're optimistic on a few things, particularly because we've been investing in fusion and geothermal. Those are certainly a big attention from the current government, because I look at it as I'm going to be investing in drill, baby, drill. I'm going to be drilling for geothermal. I'm going to be drilling for natural hydrogen. I'm going to be drilling and making AI for discovering critical materials much, much faster. So these are all still things that the current administration of the oil and gas industry should appeal to, because that gives them a future-proof jobs for the next 10, 20, 50 years, right? So it's about catching the attention on the biggest things. You should not sugarcoat. You should not do drill, baby, drill for the sake of it. But if you're doing it for the right industries, it makes all the difference, right? And there are some industries, whether it's cement or steel, that were never the high industries or growing industries in the US. The customers, the investors, the markets could all be Asia, Europe, and so on and so forth. So you have to pick your industries, pick the right inflections that need to happen, focus on kind of the customers and contracts and all that stuff, and get there. Look, I mean, these are all 100-year problems that we are trying to solve. Yesterday's tweet cannot change the perspective we need to have long-term, or the relationship US and Europe has for the last 100 years, right? So we need to be sensitive to what is happening, but some of us need to keep moving to make this happen.
I think that 2 years ago, the mood here was, let's pack our bags and move to the US because of the IRA. Now everybody's saying, well, Europe is the right place to be. Laurie, you have a fund, it's American, but you're here in Europe. How do you feel that?
Again, I think it's... if those businesses were built around the IRA, around the tax credits, around the grants, the subsidies, and entirely relying on that to survive, no, we should, I mean, it doesn't make sense. The climate tech business should be built to last in the long term. So not under Trump, not under Biden, any administration, it should last in the long term. So yes, there will be a bloodbath in the US, but ultimately the one that will survive will be the one with the biggest impact.
On that note, what is hot these days in climate tech? What would you immediately double down on, and what wouldn't you touch with a laser stick?
I'll tell you what I won't touch, maybe, and you've heard I'm all about unit economics. There are many sectors that makes absolutely no sense, and I'm sorry if some people here are working on those topics. Take DAC, for example, direct air capture. Just trying to suck CO2 out of the atmosphere that in this so little concentration, it's a fight against entropy. It makes absolutely no sense economically speaking. Similarly, hydrogen, green hydrogen through water electrolysis. You need more energy to split hydrogen and oxygen from water than a hydrogen molecule hold. Makes no sense either. Similarly, plastic recycling. The reverse logistics, the cost of reverse logistics for plastic is more expensive than virgin plastic itself. So, because of the unit economics, we are not touching those sectors, but on the flip side...
I think you just killed half of my portfolio.
But there are a bunch of sectors that are super exciting. So, talking about recycling critical metals, for example, where it's much more centralized. If you look at, for example, lithium-ion battery recycling, we have an investment in the sector. Very high-value product, much more centralized. This company we invested 3 years ago now, called Ascend Elements, is now a unicorn. $1 billion of tech agreements, it's growing very fast. I will say the whole kind of electrification of everything is kind of shifting the economy from a fuel economy to a material economy, putting tons of pressure on the mining industry. We are already seeing shortage of critical metals like nickel, like cobalt, and of course mining means lots of environmental challenges. So I think there is a big opportunity there. But more than the hype and sectors, what I'm excited about are companies with stronger unit economics across any sectors that are developing best solution with the best performance, cheaper, and the bonus, they are fully decarbonizing an industry, or they are cutting 50% of water pollution or whatsoever. Yeah. So that's what I'm excited about.
Interestingly enough, you didn't say the word or the letters AI. So maybe Rajesh, AI is the big topic, right? Everybody's here talking about it.
Yeah.
Well, is there an angle?
I'll
Climate?
come to that, but you wanted me to controversial. So I'll push back on Laurie. She's a good friend, so she didn't mind. So I totally agree with her on DAC and hydrogen. But if you think of the flip side of it in terms of if you're cost effective, the biggest issue with DAC is nobody is able to get to the kilowatt hour per ton. Therefore, it's expensive. It doesn't make sense. But we looked at probably 80, 90 companies out there in DAC, and we felt like nobody was doing it right. So we incubated a company that has an architecture that combines actually point source and DAC in the same system. So it's an architecture innovation that nobody else has. So if you can do the point source, which helps any of the petro, oil and gas refining companies to actually do or the steel mills and so on, to capture the carbon, but also do a DAC, and that actually reduces the overall kilowatt hour per ton, that makes a whole difference. Now you can suddenly get to $50 per ton of CO2, and you can use it for other applications. So there are ways to go after certain sectors that still need to be done, but not in a good old way of just being a Me Too product and just going after a solution. Green hydrogen, similar, I agree with her. Like most of the time when people think of green hydrogen, it's the green premium, $3 per kilogram, IRA tax credits, all of that stuff. So we looked at it in 2020, before all of this noise on green hydrogen happened, looked at NEL, Sunfire, and a whole bunch of people out there. And we felt the green hydrogen needs to be significantly lower. It has to be like $1 to $1.5 per kilogram. So we incubated a company from a completely different industry. It's not an electrolyzer approach, but another approach that had actually gone and addressed a problem similar to green hydrogen and a much lower cost because they were playing in the industrial chemicals commodity market. It's a much larger area, high current density system, all of that stuff. Forget about the details, but they can get to $1.6 per kilogram in the next 3 years, not in the next 10 years. This is without subsidy. They've built a gigafactory right now. They actually just announced a 320 megawatt electrolyzer win, when every other green hydrogen company is tanking because they never started with the fundamental basics. So even in the most skeptical sectors, if you have the most innovative solutions, keeping the techno-economics that she talked about as a fundamental criteria, you can crack the nut in terms of every industry. So that part is critical. So keep thinking, like, we all will push back in terms of this sector will not happen, that sector will not happen. And 3 years ago, we would have been in a panel saying, like, this sector has to happen because this is critical. So don't go with the investor sentiments like what we have, but go with the sound economics and the physics behind it. Going back to AI, I was just building a suspense there. So, interestingly, very coincidentally, 2018 is when we invested in Commonwealth Fusion, which is a crazy idea, but phenomenal progress in the last 7-8 years. There'll still be early commercialization in 2031, 2032. That'll be the first commercial reactor. The reason I bring it up, that's the same year we wrote our check in OpenAI. We were the first institutional investor there, put a $50 million check that has grown well. So I do think AI has a role in a couple of industries in climate. Just like we shouldn't greenwash, we shouldn't do AI wash. That will be the end of the sector. That will be the end of credibility. Couple of examples, right? In AI, we have a fusion company called Rialta. That's the only other fusion company that we invested into for XYZ reasons. But they have been working with AWS and the AI to actually build hundreds of iterations every day for plasma stability. You cannot think of as different a sector as fusion and AI, but they're really using AI on a daily basis to actually figure out what the right plasma stability needs to be. So it's phenomenal progress on some of these specific sectors. People are looking at AI for perovskite materials. We have a perovskite material company that's doing 100 megawatt this year and starting gigawatts next year. But the material optimization, like how do you build reliability into it, with materials optimization is becoming critical. We're also looking at AI for detecting minerals much faster. Mining is a big industry. There's going to be a huge need for copper, whether you believe in climate or not. Copper is needed for building out the grid, which is becoming very critical for data centers. So if you look at some of these sectors, things can accelerate much faster. The reason I'm saying AI for minerals is AI was instrumental in autonomous driving. It's sensor fusion of cameras, LiDARs, and radars. Similarly, if you look at how minerals are detected, it's sensor fusion of gravity, magnetic EM sensors. So if you can innovate along those lines, you can do things much faster. The flip side of AI is not just AI, but data centers, right? Like what's going to happen to data center needs and all that. That's actually creating a huge pull for some of these climate industries, right? Which is where you see the Microsofts, Googles of the world trying to sign up for contracts for a geothermal company and so on. So that's a big deal in terms of AI and forward-thinking companies putting their bet behind some of these climate companies. So we need to figure out how to get it right.
Thanks. Liza, maybe a continuation of the topic. It's another big topic, and where do you make money in climate tech? Can you make money in climate tech? Or is it really the open AI that is making money for LPs and not really the first of a kind mining company?
You can absolutely make money in climate tech, but I don't think everybody will make money in climate tech. But I think what both Rajesh and Laurie said is so important, that most climate technology is simply more efficient. So it will be cheaper, and that means that there's huge markets for them, right? Renewable energy is already showing it, EVs are already showing it. Sometimes I think we don't spend enough time on the incredible progress that we're already making and how quickly adoption is going. So yeah, there's trillions of dollars markets to be tapped into. Historically, when you look at the performance of climate tech, it's on par with general VC and growth equity. Cambridge Associates has put out some famous data, more recently Deal Room together with Creo, so the performance is there. I think for our portfolio also, we've been investing for 4 years, so there hasn't been a lot of exits, but we're seeing that across the board. That's not just climate tech, it's just that we don't have great exit markets. But looking through our portfolio, there's a lot of exciting exits coming, right? Whether it's fusion, geothermal, battery recycling, battery manufacturing, there's just so many companies to go around.
I mean, I think we all feel the same, that there is a lot of hope, but there is not a lot of proof, right? I mean, we're all fundraising. Again, we're coming back, by the way, so we need more money. But the word is DPI, right? Laurie, we were talking about it before.
Yeah.
We said we're not going to talk it here, but maybe we should.
Yeah, no, we were talking about it. We are going to go out in the market later this year, and yes, there is...
Going back to market, everybody, that means that we as VCs, we are...
Fundraising.
We are also fundraising,
yeah,
right?
we are fundraising.
Yeah.
Which I guess builds empathy also for the founders that are fundraising themselves. No, but the issue is that we've not seen many IPO and exit in the past couple of years. And so LPs right now, it's the liquidity is not there. So we absolutely need to start seeing again IPOs, exits. But that being said, as Liza said, it's across all markets. It's not just climate, right? And if we look at the performances, looking at our first fund, this vintage, we are among the best performers across all sectors, software and later stage and everything. So you can have very strong performances with climate. We do mostly hardware, so you can have very strong performances with hardware/climate. And if we look at our best performers, so we have a unicorn and a decacorn. Our best performing company, surprisingly, is a biodiversity preservation company. It's in the nature-based solution sector. So even there, we can see very strong performances.
So even in nature-based solutions, you can see not just technology-based, you can see good outcome, right?
Yeah, we are talking about over $10 billion valuation for this company. We invested in 2020. So yeah, absolutely.
Rajesh, maybe something controversial. Can you make money in fusion?
You can. The question
in our lifetime.
In our lifetime, for sure. The question is the timeline, right? The way we learned our lessons was you can't be just passionate in climate tech. You need to be patient capital in climate tech as well. So that's where, when we started 20 years ago, we had a single fund to focus on climate tech. But today, if you look at it, every time we raise a fund, we raise 3 sub-funds under it. So we have a seed fund, so we can write kind of $2 to $10 million checks. We have a main fund that's a $1.6 billion fund, so we can write $8 to $30 billion checks. We have a later stage fund that you can write 50 to 75, because that's the kind of commitment long-term you need to build these companies through. Now, you don't put good money after bad money. That's not an option. But for good companies, you need to be able to support these companies, and you cannot drop them just because the rest of the investors are going away. So that kind of effort is needed from fund perspective, from government's perspective as well. Like in the US, I was saying yesterday, there is an ARPA-E, and there is a lot of investors, and then there was a DOE loan program office to kind of take these companies through the journey. Otherwise, startups themselves, unfortunately, die too many times. Climate, you have to 10x that in terms of the number of times, the higher probability of failure just because investors are not there, right? So there needs to be different structures. And even if you're a seed fund, figure out a way to partner with some of the larger funds. And that ecosystem needs to work together very, very closely.
Liza, does that mean that the mainstream funds are going to be here in a few years' time, and we, the climate tech funds, are going to be out of business?
No, I think we both need to be there, right? So I'm waiting for more of the general funds to come in, also in Europe with the big dollars. But I think what Rajesh said is the capital stack is just so important. We have these great innovations, but it's capital intensive to scale these companies. I'm really happy to see also that European Union, for example, is finally stepping up with some more folk financing and other public tools, because just with private markets, it is tough.
Yeah, just to clarify, what I mean is also, if there are later stage funds in any given country, figure out a way to get them excited about climate tech and work together, so you're not just doing a seed investments or not just doing a later stage investment, but that ecosystem really needs to talk together really well. And some of that is a forcing function from governments as well to make that happen. So a lot of things need to go together to get it right. It takes a village to build these climate companies. And we just need to work together between geographies, between fund stages, between government grants, everything needs to be on the table to get it done.
I'll jump into one question from the audience. It's a topic that I also heard about going back in the past few days, and it's also something that we're talking. Defense, that's a hot topic right now. So dual use, how do you think about it? Are we allowed to do it? Is it a good thing, bad thing? Liza, why don't you start from the LP perspective?
So many technology is already dual use, and maybe we don't know it, right? But whether we're talking electrification of vehicles or battery-powered drones, so much of the technologies we've developed we're already using. And they're saving a lot of lives. About half of all the deaths that we see in wars are due to refueling or bringing supplies, and a lot of those supplies are fuels. So just electrifying your fleet already makes you much more safer or save lives.
So we're going to have net zero ammunition?
Well, we have net zero drones, so yeah, but I think it's inevitable, right? And I actually think it's not a bad thing that Europe is waking up also to that we need our own defense system, and we need to finance it, and we need to leverage the technologies that we have.
What do you see from the US perspective? Maybe it's a different one.
I'm actually excited. I used to work with the US Department of Defense when I was with SRI International, taking those military technologies and basically building companies for commercial applications. So I've took military robots, applied that to agriculture, technologies for healthcare in the field for soldiers, applying that to broad healthcare. I mean, the defense spending in terms of developing technologies, especially in the US, is huge. And there are so many technologies on the shelves that could be used for climate and for the planet. So yes, I'm like, if we can use that and leverage those technologies, absolutely. And if maybe not offense, but defense, if those companies can start generating revenue and growth thanks to defense money to then target those big industries and have a big impact on nature, I'm like, yes, absolutely.
Rajesh?
Yeah, I do think defense is important, right? We do invest in defense and space tech and all that stuff. We are an early investor in Rocket Labs, Hermes, which is a Mach 5 company, done space manufacturing. But I think it's helpful not to confuse good defense tech investments with climate tech. That's when you start confusing things, go away from what needs to get done in climate itself. You need fusion, you need geothermal, you need 3 or 4 things to make a huge difference in climate tech. The moment you deviate from that and say, hey, I'm doing XYZ because there is IRA available. Hey, I'm doing alpha, beta, gamma because defense money is available. Those things have a tendency to go away as well. So you just need to do the right combination of things to do the right thing. And some sectors, yeah, if you're drones and other stuff, it's good defense tech, but it's not really climate tech, right? So just need to stick to what you need to do. Diversification is okay, as far as you maintain the passion in what you still need to do. Right? We do diversify. Like I said, we have done OpenAI, we have done defense tech, we have done climate tech, but we have increased the size of the fund to be able to do the other things, not reduce the number of dollars that need to go into climate tech because something else is hot. So that overarching theme needs to be there.
Yeah. We have another question from the audience about the returns and whether there is an exit market. If I look at CTVC numbers, Sightline, and I see that the biggest buyer is Shell, then I'm a little bit worried, right? I mean, because they're not oil and gas, they are traded at 1x, and they're not known for paying high prices. So this is a little bit worrying. So can we actually make money?
Well, as we've already said, it's been a tough exit market, right? So I don't think you need to take or you should take the last couple of years as to what's going to happen in the next couple of years. It's definitely been majority M&A exits. A lot of companies also target an M&A exit. Not everybody wants to go public. And I agree that Shell, looking at what they're doing right now, maybe it's not the best kind of exit to then succeed with your company. We've also seen successful exits towards Shell and then companies that got killed later on because business priorities shifted. So it's not always successful. We also see a lot of companies that buy technologies and then use those or help those scale more rapidly, whether it's heat pumps being bought up by larger manufacturers, or ABB is now buying a lot of different software solutions. To me, it actually makes sense that also in a market where maybe the pockets aren't as deep or due to higher interest rates, it's a little bit harder that you exit a little bit earlier and start your next business.
What do you think?
Again, it's not a climate tech problem, it's a market problem in general. We need the IPO and the public market to be back. It's good that actually there are companies still like Shell and a bunch of industrial companies that are making acquisitions. We need that. But again, it's not just climate, it's the whole market in general.
We're looking to build the next Shell and next Aramco, right? So that's the North Star that needs to be there. In that process, if something gets acquired, that's fine. And Shell has been a good co-investor with us in some of the green hydrogen company, Verdagy, and so on. So they're a public company. They also go through these ups and downs in terms of who the leadership is and what the sentiment is and all that stuff. But just to those small acquisitions by incremental corporates will not be the right way to think about it.
Right. Let's move on to the next topic, which is financing, right? I mean, we need to finance, and Rajesh, you were saying, go big or go bust. And we need to finance big first-of-a-kind plants, and that requires a lot of money, big money. And the funds are not necessarily big enough, or they're too early or too late. How do we finance the missing middle? What do you think we should do?
I think some groups have done a good job. Breakthrough has been a good forcing function in the US, and more organizations like that have to come up, right? We talked about our 3 funds. Similarly, Breakthrough Energy has Breakthrough Energy Fellows, Breakthrough Ventures, Breakthrough Catalyst, just to be clear, right? These organizations are not just meant to be large capital for just those existing companies. It's a larger pool they all look for and see what are the best companies to invest in. So organizations like that, we need a lot more of them to make it happen. And like I said, government needs to be a forcing function. So depending on which country you are from, certainly take that message and say why, whether it's France or Germany or wherever you're coming from, needs to pull those things through. And you can start today. It doesn't have to have started 15 years ago. Look, there was no climate tech 2.0 before 2020. You couldn't go to a conference and show your business card and say you're working on climate tech, right? 2019, 28, people will be like, go get a job, right? Suddenly 21, 22, everything was hot in climate tech. And now I'm seeing the same sentiment that happened for 10 years between 1.0 and 2.0. We shouldn't be too worried about those temporary sentiments. So for example, India as a country is doing a lot in climate tech. They're trying to build solar, they're trying to build green hydrogen, all of that stuff. So every country needs to be working on it. This is your defense. This is your energy security. Like the next time there is a big war and there is a natural gas that's missing, that's not available for your country, that's not the time to wake up. Now is the time to wake up and figure out how to build that energy security.
Liza is a fund investor. What is your preference? How do you close the big gap in the middle?
Well, we've been talking about the missing middle for 2 years, and I think actually a lot has happened in those 2 years. So one part is that we are seeing increased support from governments. I mean, over the last couple of years, obviously in the US, now in Europe, the EIB is stepping up quite a bit. The Clean Industrial Deal is looking at folk financing. There's a lot of private initiatives trying to be creative, combining some philanthropic and catalytic capital with private capital. And I think what's made a huge difference is offtake agreements. So we're really seeing the corporates demand and put their money where their mouth is when it comes to new technologies. And those agreements are helping to, get those first-of-a-kind finance just because, the product will be paid for.
Laurie, offtake agreements, yeah?
Offtake, but also back on the how do you fund a first of a kind, right? We should not think only about equity for portfolio companies, and we do that actually very early on. venture debt, equipment financing. I think to me it makes no sense to use equity dollar to build a facility, a manufacturing facility. Also leveraging partnership with industrial partners that can then bring project financing to the table. So leveraging all of those kind of financing options makes the first of a kind financing really feasible. So that's what we really focus on early on. Off-take agreement, of course, help. Again, I mentioned as an element when we received this $1 billion off-take agreement from a top EV maker. Yes, it made the fundraising much easier, absolutely. But I think there is also something we need to change in terms of thinking. We always think that hardware deep tech is going to be more expensive because you need to build those big plants. But if you look at software companies, the ones that are very successful, take Uber, for example, look at how much money they ended up raising. Hardware is not necessarily more expensive if you are smart in terms of deploying your dollars. And if you can also be asset light, meaning you don't necessarily need to build the facility yourself. There are a bunch of contract manufacturers out there. So use those contract manufacturers and only build whatever is needed. Try to outsource everything else.
Maybe trying to be controversial here, but on Ascend, for example, or the others that are building facilities, we know it's running over budget, not in $1 million, but in 100, 200 million. This is not small amount of money. Yeah? How do we cover these overruns?
Some of these things should not have even started, right? Like there are a lot of companies, whether it's in US or Europe, there are like spectacular examples from cleantech 1.0 or even 2.0, and US is also to be blamed, where we are trying to build battery companies that were built in China even 10, 15 years ago. Like they were trying to copy what China had done 10, 15 years ago in things like CATL and hoping to put that same amount of money now to have a prayer to get the same product in the next 5 to 8 years. How will you ever be cost competitive, right? So that's the problem of if there is too much money chasing too few companies and everybody wants to have a climate checkbox, then you put too much money too early in a non-differentiated technology. So it has to be differentiated in a huge way. And like Laurie said, figure out a way to integrate into existing solutions, partner with somebody and go big and on a significantly different solution, right? So those principles are important. And on that line, some people have raised significant amount of money based on offtake agreements. There's a difference between take or pay contracts where customers have actually validated your solution in a big way, and then you go raise money based on that, versus a lot of LOIs that got floated around in 21, 22. Too many people raised too much money based on LOIs from customers that was not worth the paper it was written on. So we were very clear to our companies, like just focus on validating your product, de-risk your product the right way. It's like, I come originally from India. There is a Bollywood saying like, true love comes back. So keep doing the right thing, like eventually de-risk it and you will get there and make that incremental kind of offtake agreements. And when you raise a big money, you better make sure you have done the feed, you have done the FID, all of that stuff. And therefore, customers are giving you the take or pay. Otherwise, it's again, too many of these stories will keep coming up.
At the same time, and we're brutally honest or trying to be open and brutally honest with ourselves all the time, and especially in the front of the public here. I've heard the statistic, I didn't double check it, so take it with a pinch of salt, that in this wave of climate tech or clean tech 2.0, we already accumulated a loss of $32 billion, of which Northvolt alone is $15 billion loss, and Cleantech 1.0 was, all in all, was $12 billion loss.
But losses are a part of venture capital investing, so you need to put that next to what is the total value of all of the companies that we funded. Only then is that number meaningful.
That's a good point. Rajesh?
Yeah, I didn't look at the numbers, you might be right. And there are definitely bad examples that should not have happened, but you have to put the dollars to work. You have to put a lot of dollars into a lot of innovative ideas and be able to quickly filter it to put the big dollars behind the right ones. We'll make some mistakes again, but we shouldn't be making the same mistakes we did in Cleantech 1.0. I mean, the challenge with Cleantech 2.0 was 99% of the investors who were in Cleantech 1.0 haven't come back to Cleantech 2.0, right? So that lessons learned, the hard lessons have been lost in a big way.
So maybe that's, before we go into one or more two questions, lessons learned, yeah? And before we go to the final kind of points. Let's open up. Laurie, biggest mistakes, biggest bets that went wrong, or topics, you don't have to say names.
You mean now? I mean companies?
Generally, yes.
Generally, again, unit economics. Sorry, I'm repeating myself. But again, what has been wrong, and I agree with Rajesh, we lost all of this learning from Clean Tech 1.0. And I think lots of the learning was around companies that could scale, and again, the cost. And unfortunately, we've made much of mistakes investing in companies that would have never survived, right, without venture capital money and without subsidies. So I think that's really the biggest learning, and being disciplined around what's going to make climate tech successful, which is, again, the performances and the economics of those companies is key.
Liza, maybe?
I think we're learning a big lesson about how to talk about climate tech, right? So maybe we shouldn't call it climate tech anymore. There's a whole debate going on. But basically, I mean, we touched a lot about it on the economics, but there's a geopolitical aspect to it. There's a speed of building this out kind of aspect. There's just so many reasons that climate tech is superior and is embraced by many different geographies. So let's focus on that.
Amazing. Rajesh?
Yeah, from a lessons perspective, I think there are a lot of people who have learned those lessons in Clean Tech 1.0, bring them into our syndicate, investment syndicate, or more importantly, into your team. There are a lot of people that have failed, tried to scale it up in solar, batteries, and all that stuff. Now, as you're thinking about the next generation companies in electrochemistry, whether it's hydrogen, ammonia, or steel, or whatever it is, build a diverse team that brings that kind of a learning experience. That makes all the difference in terms of how do you scale up, how do you not repeat the same mistakes.
We have a question here from the audience about modularity versus monolithic approach. Which one do you prefer? Who wants to take this one?
Modularity versus?
Modularity versus big monolithic approach of building big plants.
We've taken both approaches. In fusion, we have two companies. One is CFS, which is like the poster child for nuclear fusion. They can build half a gigawatt projects. We also took we looked at every other fusion company and finally invested in one more called a Rialta Fusion. They take a modular approach. They can do 50 megawatts of cylindrical versus complicated lasers, stellarators, and all of that stuff. By that, because you can do that, you can go after industrial heat, you can go after data centers, and you can scale up really well. If you just have to add one more circular pipe, 50 megawatt increments, that makes a huge difference in terms of the cost curves, the overall number of magnets you need, and all that stuff. So we've taken both those extremes, and both have different markets. So it's also about the product market fit. And we have done the modularity one in fertilizers because Haber-Bosch should not exist. It's a 100-year-old process. There should be better ways to do it. But our green hydrogen company can be that fertilizer supplier for green fertilizers as well. So there is, again, an example of a centralized system that can disrupt existing way it's done, as well as a modular approach so you can manufacture the fertilizers in a modular way. So there's no one size in some of these things. But in general, I'm a fan of if you can modularize it, scale it up really well, that's a huge value.
Amazing.
Modularization really helps bringing down the learning curves, right? So the more modular you can go, the faster you can learn, the faster costs decrease. But in certain technologies, it's just not possible.
The clock is already kind of red, showing us that we need to start wrapping up. What is your one piece of advice to the people in the audience, to the founders out there? What's the takeaway from today? Quick one. Laurie.
Keep in mind, climate tech isn't about politics. It's not about subsidies. It's about economics. So make the climate tech solution the best performance-wise and cost-wise, and it will win. It will win under Trump. It will win under Biden. It will win under any administration.
For me, the biggest one is team, because the team you build is the company you build. So make sure you're bringing diverse team from people who have scaled up in other industries, similar industries, but not the exactly same industries. I'll give you just one example. It's an important example for me because I look at that for every company I invest into. We have a hydrogen company called Vertigy. Fantastic technology, scales up really well. But when I was looking for the CEO 4 years ago, my single principle was I should not hire a CEO from the green hydrogen industry, from hydrogen industry, period. Because nobody in the hydrogen industry has scaled up anything. They just wouldn't know how to build a company. But I brought in somebody who was the COO of SunPower, so he had scaled up solar operations extremely well. He was the exec VP at Solectron and Flextronics. So he knew how to do contract manufacturing, how to do facilities. And he was in the board of Ballard Power, which is a fuel cell company. So he knew just enough about hydrogen, but not corrupted by hydrogen. But I'm giving that as an example because I use that whether I recruit people for the steel industry or cement industry, whatever. So that's an important principle. And as VCs, I spend 70–80% of my time on hiring for my companies because that's the biggest value we can add. So think of it as you think about your own team. Don't bring people similar to you, who you are, and definitely think about disrupting a different industry. Don't shy away.
Thank you. Liza?
Very brief, but think about your full fundraising journey, whether you're a founder or a startup investor. Think about all the different phases you need, who you want the capital from, who you should be building relationships, what they want to see by the time you get there. Really drawing that out from the beginning is the best road to success.
Great. So we're at the hour. I think the big message from today is climate tech is live and kicking. No gloom and doom, and we are going to make a lot of money for our investors. And by doing that, we're going to make a great impact on the planet. Thank you, everybody.
Thank you.
Thank you.
Thank you.